Hi, Simon, Ingmar, Richard, all you warrior brothers and sisters. How are you today? Everyone doing okay? Feature of the day, pull back in yen, pull back in yields. Looks corrective. Hey, Ryan, how are you? So, any reason besides, what's obvious, the pullback in yields for yen weakness today?
Yeah, a little bit. It's a little bit messy this morning. A lot of end of month stuff going through. Still a little bit of action going through from last week. We've got energy bits and bobs going through in Europe. One of those ones where you've got 100 different reasons why something's moving and you can't put your thumb on one.
Yeah, it kind of looks corrective to me, and that the high isn't in. That, we had a confirmed high up there, which is different than, what we had in the Dixie, which did not confirm.
And that's the key thing. I think we've had the tests, but not the breaks.
Yeah,
and that's the key right now.
I know a lot of guys are talking 110.5, 111. There's some, fifth wave targets, but I've seen what they call, and I'm far from an Elliotician. We did make new highs by about 20 points here, and came out of a triangle, and now we're back inside of it, where it could be what Ellioticians would call a fifth wave failure, or a truncated fifth.
Yeah.
And I still think, because of the positioning in euro, the fact that we did not make a new low Sunday night, early Monday morning, that there's room to squeeze almost record net short positions in euro. And,
well, Citi are out. Citi's global macro department are out saying that they think we're in for a longer USD bullish cycle. So that's probably what means if it's Citi, you want to go short.
Yeah, that's a good fade. I mean, don't you fade those guys?
Yeah, usually.
Okay. With the yen lower, though, the gold is still weaker, acting sick. Normally, you'd see some supportive action in there. Aussie, I wanted to ask you this. Last week I didn't think that we would be able to buy it under 50 for a stop hunt, and that's what happened after Powell on Sunday night, and it came out of there pretty good. I think you buy breaks in Aussie.
Yeah, it's still looking quite well supported. You take it a bit longer, maybe to a daily or something like that, and it's stopped going down at the very least, and that's always a good start if you want to get long and see a price going up. Again,
and this is pretty classic action, right? You 50, 50, 50, and then flush it. I don't know if it was Sunday evening or Monday in Europe, but flushed it and closed okay.
Yeah, exactly. We've got a lot of these lines in play. How we've had all the big news. It can't break this level. It can't. Aussie can't break 68.50 meaningfully. Euro dollar couldn't break 99. Dollar yen couldn't break 139. These are all significant because it tells you what the market wants to do. If you think dollar yen or whatever's going to 140, well, it ain't if it can't get through 139 right after Powell's come out and set the market straight, sort of thing.
Something I do think it's not market related that we need to address. Ryan, are you getting daily notices about F.A.C.E?
Can I answer that question? Because there is our friend who's asking. This is something that we don't control. It's done by Zoom, and they have some issue in their servers. We've talked about them a zillion times. Now, what I suggest for people who don't get the emails, find one of the previous emails that you got. It's always the same link for you. So find one of the previous emails, bookmark that link, and never have to depend on the email ever again. Okay. So, but yeah, it's not our fault. Unfortunately, we are really fighting with these guys and see if we can get this fixed. Not much more we can do.
And if you don't know by now what time we start, anyway, I don't need a reminder to know what time we start anymore.
But also in that link, there should be a 9-digit number. I think it starts 444. You can just use that 9-digit number to join Zoom, I believe, via that link. That's how I get in anyway, because that Zoom link number is the same number for this webinar each and every day. There's a different one for F.A.C.E, a different one for the flow show, etc.
Yeah.
So the 9-digit number.
Okay. Can we get back to ideas for making money now? Hi, Laura. Good for you. I know you would do that. You're such a smart lady. So yesterday, S&P's held the 50. Look at that trap between the 50 and 200 here. I think we're going to take this out, but you never know. I think Greg is talking 39.20 or so is what it has to hold, which is a previous, I don't know, wave 1 high or something like that. But so far, look, besides this day, orderly, and the bears are coming out of the closet, this is it. And, we peaked and we're going to new lows, and no doubt about it. And I still think there's a shot that we take out the 200-day first before we have a more important top. Just a guess, but that's what I do for a living. I'm a professional guesser. And wondering what else is really striking your fancy. A few days left. Oh, tomorrow's the last day of the month, and I guess we'll be back to full strength after Labor Day. Volume should pick up. Another few days of getting rid of this summer, which really wasn't bad summer. It was pretty good opportunities. Yeah. Anything that really stands out to you, Stel?
One thing that does stand out is the underperformance of the metals. We have the dollar retreating a little bit
Besides
today.
That, Stel, I don't want to hear about what.
Yeah, I know.
All right, but it's true. Yen down, yields down, gold down.
Yeah. So that's not great if you're bullish. So still waiting to enter again.
Well, it's one thing to be bullish. It's another thing to have assets either in gold or related to gold that make it even harder than just having an opinion.
That's true. Currency-wise, I'm going to stick with what I've been saying for a while. I still don't like the pound. I like euro pound to the upside, and it's still going well. How far will it go? It's a good question, but I think in the kind of more medium term, I think we're going to head to the 90s, and I said that since the mid 83s. So, and I think it's going to be both euro strength and sterling weakness. So, but otherwise, not much to say. I'm looking at Norway, but it's not doing anything. Stocks, I'm not touching. I'm not selling until we get back to 4200.
Norway actually had a pretty weak rally when the dollar went to new highs. It was a pretty weak rally. It was weaker than Canada. So,
we've got a really nice technical setup in the U.S. dollar Norwegian krona right now. My opinion.
Welcome back, Killer.
Hey, thanks, man. I need to jump in there just because I'll go back and revisit Norway because I actually think this is a good setup that's developing here. So
well, I think unless is Kman here today?
I am. Good early morning, Dale.
Hi, how are you, bro?
Very well, thank you. Hope
you're your impression of the end pullback today?
I'm not overly impressed. I did manage a bit of my longs, but I'm still about a third long of what I bought initially on pound. So I'm just trying to prepare for September and QT and dollar yen to trade over 140. Well, that's my opinion anyway. I'm just trying to be patient, and for the rest, having a few stabs here and there and see what's happening. A lot of it is month end, but we have to admit that the euro is behaving better because all the hawks are out and the doves are remaining very silent. So euro is doing pretty okay. It was sort of expected on the end of month flows due to some rebalancing, that the euro would pick up a bit. But those hawks and the fact European energy prices are coming off is for sure helping the euro right now. As for the yen, I'm still
Yeah,
overall
my bet down here, whenever all the euro bears were talking 95 or so, was because of positioning in the COT and almost record net short positions on the euro, that the next 500 pips would come to the upside, not the downside.
I'm not sure about 500, but let's see how the next
well, that would have taken it to 95 when it was trading parity. So, anyway, squeezes can start real quiet and just run people. And then, then full force. So I think everything's a lot's gonna matter with the NFP Friday. Isn't that the big number of the week?
That is for sure, and I think there's a lot of importance there. If we get a weak number, especially the dollar bears will be out in force, I reckon. But if in turn we get another surprise, the White House somewhere said that they are expecting the job markets to cool down. So are they giving us a hint that the numbers may come out on the weak side? It's possible, but yeah, it's going to be a big number, especially that I think September is going to be a big month. So that would kick off things quite hard, I think. If in turn we get a good number, coupled to a doubling of the QT, then we may see that famous dollar rally that may kill the last of the bears, and then perhaps turn around at the end of September also.
I'm getting a message here. Greg and I disagree. He's looking for one more new low, but we talked about this last week, and I think the bonds look good. And I actually think that they're going to surprise people. No one wants to touch them. But, part of what Paul is doing is to save the bond market. So if he creates a recession after this bond massacre, it could create quite a recovery. I mean, just a measured move over these highs is going to take you back to the major breakdown. I think the surprise in during the month of September, October is going to be lower yields, not higher yields, and more on the long end than on the short end. But to me, this looks like a higher low. Maybe in Elliott terms, this is a 2. This was, what was it, about 12 points. So if you got 1.618 would give you about 20 from here. It's going to give you 130. And if you just use 120 as a neckline, it still gives you 130. And that's a hell of a move in the bond market. And you're going to be hard pressed to find a lot of bond bulls in this environment with the Fed. It's a pretty contrarian trade, don't you think? All our bond experts here.
Yes and no, because we've seen over the past months how quickly the bond market is now to reprice expectations, and even bond traders themselves, they were saying like everything is going so much faster than before the pandemic.
Oh yeah, we're a banana republic.
Come again?
Yeah, they're comparing the volatility in our treasury market to that of a banana republic.
Yeah, it's huge. I mean, one has to imagine how many $1 trillion are only in the 10-year market. It's huge globally, worldwide. So every 10, 20 BPs repricing, sometimes in 24 hours, is huge for portfolios. So yeah, if you're looking at such a move, such a surprise move, yeah, that would likely send the dollar down the drain.
Yeah, that's anyway. And the bears would say that would happen because of a big stock sell-off on a flight to quality. But the possibility is, let's say rates led it. They both went down together. So if you get that kind of move in treasuries, maybe that could create the melt up that some of the bulls are still holding out for, like 5,400 S&Ps sometime in the future. If we had a bond rally like that.
Depends. If you're looking at a bond melt up that is yields down, it's likely going to come because of a recession, and I can't buy stocks when it's because of a recession.
You can't.
I can't. No.
I know, but fund managers will. They'll look through it. They'll look through it and go, well, the interest rate pressure is off by tech. So,
yeah, I think
anyway.
you can be right, because they, as you were saying already a couple of times, they are underinvested right now because they expect the lower stock markets, right? So they may be underinvested and then take the opportunity, to put in a real rally. It's all possible, and it can all unfold in September, October. I do think personally that we are heading into a big month for markets.
So what happens, Dale, if the US does head into a proper or fairly deep recession? The Fed are forced to cut rates, but they rule out QE. What happens then? They say they're saving QE for an emergency. They rule out QE. They say, right, we're going to cut rates. It's going to be normal policy moves. We're not going QE because it's not a big deal. It's a natural cycle.
Okay.
What does that do for stocks? Does
well,
that
you know, there are
lower?
We could make one more new high and then have a crash, because some Ellioticians would label this whole correction that we have in the S&Ps as a 4. All right. I mean, this whole thing is a 4 followed by a 5, which implies new highs and then the completion of the whole cycle. Yeah. And then we could have a crash. So, you know, one more boomlet, and then you're right. Lower rates won't matter, especially if QT is still going on. And even if they stop QT. See, you know, what they're doing now probably doesn't really impact the economy until next year anyway.
Yeah.
There's some immediate effects in housing, but, you know, it takes time for Fed policy to really work its way through the system. Some of it's immediate, but, you know, there are probably some things that are going on behind the scenes we don't know, that some assets might be under a lot of pressure right now with what the Fed is doing, and maybe something breaks. So anyway, I think it's possible to have a new high in the S&P to complete this, you know, bull market, or put in a 5 and then have a crash.
Yeah, I just think QE is not going to be a normal policy response. It's going to, that's an emergency policy response.
Yeah, that's after the crash they come back with QE. Yeah,
and I think any of the market who buy stocks thinking QE's coming, they're the ones who are going to get a kick in. They may get the new high, and then they're going to get a kick in the ass.
Well, this is kind of it's the same thought process as as people assuming there's going to be a Fed pivot. Like it's too early to be it's obvious after Jackson Hole, it's obvious that the Fed's not ready to quote unquote pivot, and we might be a ways away still.
Yeah.
Right. Exactly. I mean, it's the same people, and I agree with you as far as having those false hopes of quantitative easing. I mean, you know, it is an emergency response, and unless we have something that goes completely, you know, if the market goes tits up because of some crazy black swan event that we don't know of, then, you know, to expect the Fed to come save us at this point is ludicrous in my opinion.
But they are kind of schizo.
What do you mean?
Well, I mean that they, you know, and since I've been watching Powell, he's had quite a few flips. And if we get a week, you know, and I'm not talking about them even pausing, but if we get a weak jobs number Friday, they may only go. Now, I think the market has 75 priced in after Powell. But if we have a weak NFP, you know, maybe he'll only go 50, and that'll be like a bullish event because it's not 75.
That would definitely be bullish. But I don't know. What do you guys think about jobs here? I'm not in the camp that our jobs picture in the US anyway starting to show weakness. I do believe it will this fall, probably closer to the holidays. We're going to start to see, employment, not part-time employment, not, holiday employment, just employment in general is going to really start to soften then. But I just don't see it right now. And I don't know. Does anybody else have any thoughts?
Yeah, I think that it could be a really strange one. I mean, we're not seeing any weakness. First and foremost, as we mentioned, we've had this comment from the White House saying they expecting jobs to cool off. Okay, have they front run the NFP? Who knows? But we've been seeing waiting for weakness in the jobs market. It hasn't come along. But the weird thing is, as we've spoken about before, is that as the cost of living stuff crunches, you get more people coming back into the jobs market. That could naturally raise unemployment without anyone actually becoming unemployed, if you get my drift. That's just people coming into the market, the participation rate rising,
but the participation rate has been falling.
Rises, but you haven't actually lost anyone from the jobs market, and we could see that situation.
But the participation rate has been actually falling. It has been doing the opposite, and in my opinion, that is one of the elements that shows actual weakness, because we have
the Great Resignation.
We have jobs numbers seemingly remaining strong, right? But if you look into the metrics, it's more and more apparent that the same people are getting more part-time jobs than anything else, and people that have been out of the workforce are not stepping in. Actually, the participation rate has been falling during the past few months, and we are in multi-year low again, which is quite peculiar. I mean,
we're talking about the future. What might happen over the months ahead. I'm just throwing out one potential way in which unemployment could rise. Fulfilling what the Fed want to do, but not actually losing people from the jobs market.
Here's your charter participation rate. Sorry, Dale, I took over just so I can show some
you
of the
never have
charts
to
there.
apologize. I always look forward to you taking over.
Then I know you're going to go back to shopping on Amazon. Just I'm joking.
I need a few things.
I'm joking. But yeah, okay. So, but this is what Steve is referencing over the last couple months. Participation rate is starting to come down.
Yeah, and in my opinion, it's going to come down even further. I remind you, it's a little bit weird, right? Employment numbers are not what they used to be. U3 isn't the reported unemployment. It wasn't until a few decades ago. Anybody that's unemployed for more than 365 days, just vanishes from the numbers, right?
Just for clarity, Steve, this has nothing to do with what you're saying, but Fed's barking says we are not in a recession today. Sure. Just so you know.
The fun part is that now they decided to change the definition of a recession. They find themselves with a very peculiar problem. They can't define recession anymore. So if you ask Barking or anybody else, okay, tell me, when will we be in a recession? They don't have something specific to tell you anymore.
Well, they're going to tell us like this: a recession is a risk of U.S. getting inflation back to 2%. See, that's their new definition.
Anyway.
So
anyhow,
Steve, with what you know about fundamentals, are the numbers like we had last month? Would you say the job market, besides the numbers, is not as strong as the NFP numbers show, or do you consider them a valid indication of strength?
I don't think the job market is actually strong. And I've said it before, but I don't remember if it was in the Morning Edge. The ultimate proof that the job market is not strong is the fact that wage growth is nowhere near inflation. How do you know that the job market is strong? Because workers, employees have a lot of negotiating power, right? If a job market is really tight and really strong, and employees, have a lot of strength because their bosses are afraid that if they lose them, it's extremely hard to replace them. it's very easy for them to negotiate getting back at least the loss of purchasing power from inflation, right? But we're not seeing that. For me, this is the ultimate proof that the job market is not strong. Needless to say, I think things are going to sour, and the statement, you remember when we had a statement from the White House about inflation, in essence, they front ran that strong inflation number. I think having such a statement from the White House probably photographs some kind of a bad number coming in NFPs, I'm assuming.
All right. Well, let's hold on to that thought, especially as we go into Friday, because that's where the jobs report is going to be. We only have like 5 minutes. I want to give some people some actionable ideas on how they can actually
make money. There's no interview today, Blake, so we have time.
Oh, we do. Yeah. Okay. Well, then let's continue. We'll actually come back to that, but I want to actually talk about just a few things that, in my opinion, are developing in the markets. We have because we do want to actually hit on the jobs data that's going to be coming on Friday. But I want to talk about the S&P here. The S&P is, it's come off. Dale, you were talking about another rally, back above the 200-day moving average. I still feel that the equity markets might have some unfinished business up here at the 618 retracement. So I get what you're saying, but after what had happened on Friday, with Powell, I've kind of thrown that out the window. It's he is obviously hardlining. I'm not going to be caught off guard this time.
I'm not going to be Arthur Burns. I'm Paul.
Yeah. So I don't know. I thought that 618 was going to come into play, but I was wrong. We didn't do that, and now the S&P is slipping back into this channel. And the problem that I have with the market right now is the seasonality aspect of the markets actually being under pressure in September, October. Now, I do think that stocks obviously get a boost as we get into, the end of the year. I don't know how much that's going to take place this year, but my opinion is we probably continue lower, and then whether or not we take out a new low is going to be questionable, and then, rally into the fall. So, fast forward to November, December, I think we're going to be out over in these areas, but that's just my opinion. And that's strictly based on the messaging that we got from the Fed chairman. So
Blake,
I guess,
can I add something? Sorry,
yeah,
before
please.
You go away from that chart. I agree with Paul, who says get short on a rally. I think you don't actually have the 50% on your chart, but I don't think we're going to get to the 61.8. The 50 is at 42.29 or something like that, which will probably coincide with the 200 DMA, and is also a level of interest from way back. So I think any rally towards 42 to 42.30, I'm going to be looking at to get short.
I think you'd be really lucky to even see anywhere close to that, to be honest.
I don't disagree, but I think if we do get to that level, I think it's going to be a really, really good risk reward.
Tell me what lifts us to this level. The only thing I could see that
too many shorts.
Well,
I don't think we have too many shorts anymore.
Yeah, I think positioning's more squared away now, but the one thing that I do think that could get us up there is a ceasefire in Russia, Ukraine.
Yeah,
I don't think we're going to get anything like that anytime soon.
But, yeah, you know what? But that's like, I don't think so either, but it's possible.
Now, I
try to give myself a reason why we'd get up there, and I don't see it. And
energy prices coming down more. Maybe.
First of all, I agree with you, Blake. I think it's going to be very tough to mount a rally to that level. I think that rallies should be sold, and much smaller rallies are going to be sold. Now, the only scenario I see that is actionable very, very short term is the following. Getting like very bad numbers in NFP, market cheering like, really bad numbers. Now the Fed will be forced to pivot fast, etc. So having some kind of a Friday big rally, celebrating bad data that's going to force the Fed's hand. And then soon after having a couple of Fed members coming out and saying, something, the NFPs were bad, but it's okay. We're not going to act upon a single number. The series can be volatile, so nothing changes for the time being. And market getting disappointed again, and going back to, oh my God, this guy's really mean it, we need to sell it.
Yeah, I mean, there's not gonna it would have to be a really, really like a very, very bad number. But but let's talk a little bit about currencies here, because the euro continues to trade heavy. Ryan, there's a lot of options expirations over the next couple of days around these levels, aren't there?
Yeah, we got a fairly decent one today. Bit lower down though. Let me dig out the number. Where are we? Yeah, it's way down at 99. We've got 3.34 billion off today. Further up, not too much really. 757 million at 1.01, 549 at 10020. But there's a few figures later on down the week, which obviously ForexAnalytix subscribers can get on the platform. If they're there.
I was just showing it where you can get all these options expiries. So we don't normally show this part of the platform, but I am doing it today. So because it's summer and you guys are all here. So so thanks, Ryan. Well, we do, and I think that's one of the things that's keeping us contained. We also have end of month and end of month flows. Kman, what are you seeing with the end of month flows coming through the markets?
It's been a mixed picture because we had this end of last week stock market, U.S. equity market drop. So it was expected to be dollar sellers going into month end, but I don't think that we are really going to get it much. But a fact is that euro has been bought, especially on crosses. At various stages, especially in the European morning. So that one is still valid, and I would suspect we might be seeing a little yen selling as well into month end. But again, since equity market moved a lot on the past sessions, end of month may be more messy than directional.
All right, thank you for that. And I'm going to talk a little bit about the yen, but I want to also point out the euro sterling. We broke out yesterday, so if you were, if you didn't see this, here in ForexAnalytix, we identified the breakout taking place yesterday, and then we'd rally towards the 618. We're almost there. We're like literally within a couple of pips of being there, but you'll see the 618 retracement. Nice spike highs over here in mid-July. So we're going to start to see some resistance with the euro, but the sterling is really underperforming, and it's trading right now as we speak back below 117, back at the 116 handle. And I look at the sterling as, trading really heavy. I mean, how are you guys in the UK going to deal with this, with this winter issue with energy?
Gonna burn stuff.
I mean, seriously, like I if I was living where you guys live, I would be like hoarding tree trunks, I guess, or wood. I mean, how are you guys like literally going to deal with it? It's going to be crazy. And I mean, crazy.
I'm going to take up knitting and knit the family some extra warm jumpers.
All right. Well, I mean, I look at the sterling and really, downside targets for me would be the lower end of this channel, which actually take us down below 115. But man, it seems like, I mean, I have to say that the pounds are trading extremely heavy here. Euro's still, almost pegged to the parity level, but man, the sterling is trading heavy. But I wanted to also show you guys the US dollar Norwegian krona, because we were talking about it a little earlier. And I know Stelios, look, Stelios is a Norway bull, and I'm with you, Stel. I am too. I love buying the crown, but I also have to say that this is a really nice inverted head and shoulder pattern setup. And for me, like looking for strategic places to be short US dollar Norwegian krona, especially with the dollar index so close to breaking out again, that I think that the US dollar Norwegian krona can head back up towards these trend highs. And I'll be looking for a reversal back up at these highs again. Do you have any thoughts here regarding Norway?
I agree, and I'm a bull, but not at any level. So I agree. If we do get a dollar, nice little dollar rally, and we break that neckline, we're going to be heading towards those 1030-ish highs, which will be a lovely place to short. I'm waiting for that if it materializes.
I'm with you on that. And like I said, I think the dollar still looks very constructive here. I know we have this bull flag pattern. We're challenging these highs, but if you look at the dollar index actually, the bull flag points to 112, which you might go, well, 112. I mean, that looks, so far away. It's really not. If you look at the dollar index as far as, this long-term channel,
it is doable.
It's definitely doable. Yeah, I mean here. Let's actually
quite easily actually.
Yeah, here's the weekly chart, and you can see how doable it really is. And like you might think, well, that's not very far. It's not very far, but if you look on a long-term basis, and I'm taking us now, from 1980. We still have lower highs, but imagine if the dollar index actually takes out the highs from back here in the inception of the euro. How bullish would that be for the dollar? Yeah. I mean, it'd be 112 crazy, right?
It's only 3% away, right?
Right. It's not asking a whole lot from the markets. And when you have the S&P, and let's go back over to the S&P really quick, that is I would argue is it's still at very elevated levels. I think the risk is the S&P still trades down towards 3,500, maybe even a little bit lower. And if you think where we're at right now at 4,000, a move like that in the S&P could elicit some dollar strength just from a risk aversion standpoint. One of the other things that I do need to mention, and I know, Dale, we're going a little bit longer, but since your guest did not make it today, not a big deal. We'll just go for a few more minutes and then, see if anybody else has some final comments before we wrap things up. But I think we have to be watching precious metals. I know you guys have been discussing it, but gold looks like crap. And imagine
silver looks worse.
Yeah, silver looks worse. You got precious metals. Look at this, like big open area. This is a weekly chart, and this is the 200-week moving average. It's going to coincide with that 1680 level. Imagine the stops that are being built below the 1680 level in gold. And you mentioned silver. At least one. That would be at least Dale's, or maybe Stelios's. But think about not only the stops.
Not mine. I'm taking it to the grave.
Yeah, but imagine how many sell stops are trading below there. And then you got silver looks even worse. I mean, silver, we break below this trend line here. This is a weekly chart. So we break below this trend line here. I mean, why can't silver see, the 14, 15 level? I know Stelios is going to be loading the boat down there, but again, it's trading like crap right here.
I agree.
Yep. So yeah, I mean, and when metals really roll over like that, you don't want to be short the dollar in a situation.
What's the DSI on silver? I haven't gotten it the last several days.
You have that's my
that's
my
okay.
fault.
I'm just, do you know where it is?
Ken
like
Morrison
11?
has been traveling. Yeah, all you have to do, Dale, is go into the chat room here, and let's see, go to news and research room, and
13.
There, yeah. Somebody had already beat me to it. So
you bears have a lot of company here.
Yeah. I mean, sentiment is gross, but it could be grosser.
It is bad, but it can get worse.
Yeah, yes. It could go to 8.
It could go to 7. Yeah, I mean,
it could go to 5. We've seen
it go negative 50.
It could go to negative 100. Just kidding. I'm joking. It can't. But anyway, jokes aside, hey, speaking of which, and I want to ask if anybody else has any other comments before we go. But I want to show you guys. This is the middle of summer, or the last week of summer. People Ryan. Blake, I mean, Ryan, you're taking afternoons off. Yeah. You're taking afternoons off to be with your family. That's, a lot of people are just straight up off right now. This is one of the most active trading communities out there. So if you want to join one of the most active communities in the markets, come join the ForexAnalytix community. We have the general chat room. We have our news and research room, our trades room, where, people like, man, like, hey, Blake's starting a euro sterling short. Oh, wow. We have the macro chat room and the Flowonomics chat room, the Spanish chat room. And that's just the chat rooms. We also have a really nice platform that gives you analysis on 30 different products, live squawk, live updating feed, all of our analysis patterns in play, all for $1 to try it out for 10 days. So check it out, download the mobile app, and let's see if any one of the ForexAnalytix team here has any last comments before we let everybody go for the day. What's up?
The best relationships are ones that when you give, you also receive. So with what we give here in F.A.C.E for 6 years, for it to be a good relationship and not a parasitic one, would be for people to become part of our community as a thank you, and good for yourself, to be surrounded by those traders. So reciprocation is much better than parasitic.
There you go.
Don't be a parasite.
Don't be a parasite. Yeah. All right. Hey, Kman, do you have any last minute thoughts about the dollar yen? Because you were talking about 140. I'm actually targeting a little higher than that. So.
Oh yeah, I mean, just 140 is a bit the next psychological level, right? As we stop just in front of it. No, I think it can go higher, but a lot will depend on. And let's say that the Japanese say it can go higher because the Bank of Japan is holding its hand still. Ministry of Finance overnight was playing down the intervention fears a little bit, saying that the market is moving in line with fundamentals. But now it's over to the dollar side, I think, to prove that it is worthy trading over 140. It's still the direction I'm looking at for as long as we stay comfortably above Ishimoku clouds and things.
All right. Well, I mean, the yen futures all the way around. I mean, they're just they trade. Whew, man, so weak. All right, very good. Ryan, I know you're like I said, you're spending some afternoons away with your family. You have any thoughts for us before you do head out for the day?
Yeah, I'm going to be keeping an eye on your gold levels there. That one, I missed it for a long. Previously, was it 1680? You're talking. I think you're spot on with the fact that there could be sell stops there. Look at it for potential long. Flip it to a short if it breaks.
All right. Well, you're trying to play off that big pivot. All right, sounds good. Yeah. Dale, what are you looking at, my friend?
I really like the Aussie action. So continue to buy breaks. If this pop fails all the way down to, I think, 67.80 for a right shoulder, despite the bullishness in the dollar, I like the way Aussie is shaping up longer term.
And I'll tell you, I wouldn't. This is a could be a complex inverted head and shoulder pattern with. That means the right shoulder could end up being a little bit lower than the left shoulder here. And I've got my eye on that too. But it's hard to get long Aussies in this risk-off environment. But I got to mention this. Dale and I'm going to interview Dale for the very first time on Traders Summit tomorrow.
I'm so darn nervous.
I know you should be nervous. I'm gonna grill you like no one's ever grilled you before.
I've chewed all my fingernails.
But this is gonna be a great opportunity for you guys to hear Dale and about his experiences. Dale, he is like my kids call me a dinosaur. Dale is a fossil.
Oh my gosh. Yes.
No, but learning about
ticker
Dale
tape under glass.
Dale taught dinosaurs.
It's going to be really cool to hear, Dale's story and his stories of the markets. Dale has been around for a long time. And I think this is going to be a great opportunity for you guys and gals to learn, all about Dale and what makes him up as a trader.
I'm going to talk about my first day getting lost on my way to the Chicago Mercantile Exchange.
There we go. Well, don't spoil the story here. So
that's just a teaser.
Yeah, we'll have Dale on the Trader Summit site. Actually, going to interview him tomorrow. It's going to be awesome. So thanks, Dale, for your input there. Steve, what are you looking at today? Anything that's on your radar right now that's not employment related?
On the first day, God created Dale.
Yes, indeed.
Thank you, Lord.
So I'm closely monitoring equities because I think they can roll over at any given point. I wouldn't even rule out rolling over before we even see the NFP numbers. So definitely what's in my radar is equities. Also silver, which is breaking down from a corrective channel. So we have a bearish development there as well. So that's also in my radar. And the third thing that is in my radar, in my short list, is USD yen, because it's currently testing like the last important level for bears to hold. So if they want to have a chance rolling it over in the short term, it has to happen from here. Otherwise, my target, I know you said what your target is. My target otherwise is 142.55.
All right. Well, it looks threatening, and I know. Here's the one thing, and you know who said this the other day, Dale, was Adam Button from Forex Live. When you interviewed him, he's like, one of the developments that I've seen this year is that the yen breaking away from the risk on, risk off. I mean, it isn't even a risk off tool. Like, no one's buying yen right now when stocks are down, and that is scary. I mean, if you're out there buying yen, and you see stocks roll over and the yen doesn't strengthen, that is something that we need to be watching, because it's
become more of an interest rate derivative.
Right. And I don't know if Stelius is still here, but Stel, do you have anything that you're looking at? Is he still here? I think he took off.
Stel has left.
Yeah, he has left. All right. Well, Dale, thanks for keeping us going all this time. And I know we do not have an interview today, but I want to say, by the way, if you guys ever get an opportunity to see the Killers in concert, I saw them in concert on Sunday night. Great show. And I thought I was absolutely 100% over the last 20 years completely convinced they were a UK band, and lo and behold, they are from Las Vegas, Nevada. I'm a guy that listens to music, but I don't like go deep diving into origins of bands and stuff. But I was like, wait a second, these guys are from Vegas? They're from like just down the street. Anyway, great
Glad
band.
You enjoyed, Blake.
Great show. Yeah. Anyway, thanks everybody for tuning in with us. Dale, I'm going to hand it over to you.
Okay, Abel, my trading warrior brother, thank you so much. And I love to do this. So, what excites you in life is, if you can do what you like to do and excites you in life, it's really, you're very fortunate. So, I love doing what I do. So thank you for appreciating, and guys, have a great day. You could join the team in about half an hour on the Morning Edge. And don't forget, don't just count your pips, right? What do you want to count? Let me get it in text. Not just, there you go. So if you're worried and you can't sleep, just count your blessings and fall asleep, and you'll fall asleep counting your blessings. Adios, everyone. See you tomorrow. Yeah, I'm crying too. See you guys. Oh, where's my violin?